Well, my next guest says that middle America is her favorite emerging markets. But in the meantime, folks, think about this. The jobs report last week was mixed, at least against estimates, what many would say disappointing in absolute terms. Not only that, a lot of economic data has been worrisome at the least. In fact, this one particular chart caught a lot of eyes. It's the continued slide in workers' share of economic gains. My next guest, as I've always said, is one of the smartest economists on the street, not just because of how she crunches the numbers, but she takes a lot of things into account. So let's bring in Piper Sandler, their chief global economist, Nancy Lazar. Nancy, I want to get to your 2026, the year of middle America in a moment, but I do want to start with what's happening at the Federal Reserve and Jay Powell and the Fed's role in this sort of affordability crisis.
So you have to go back in history. Let's go back to 2020 when the Fed eased way too aggressively, as did fiscal policy, and pushing price levels up egregiously across the board. Fast forward to where we are today, you have seen inflation slow. Some price levels are actually starting to grind lower, particularly on the service side. Hotels, airlines, prices have been grinding lower. Car companies are starting to cut price. And so at the margin, inflation has indeed slowed. But I agree with the level of prices are still high. What I've learned over the past, I'd say 2 years in particular, is the importance of being patient, not to overreact to what happened over the weekend with the Federal Reserve, and to wait and see what the end game is. At the end of the day, we think the economy is going to turn out to be healthier in 26, and you're going to be surprised that you're not going to need significantly lower rates because the economy will be doing better than, as of now, is expected.
Now, the economy doing better means all the way through, not this sort of aggregate data where the top 20% are doing 80% of the buying and everyone else is living day to day, week to week. I mean, will it be a shared a more shared prosperity?
That's why I'm excited about what's already starting to happen. You saw small businesses get more optimistic in mid-2025. Why? Because you did have sharply lower interest rates. The Fed has cut rates already aggressively, 175 basis points. Two, policies put in place by the new administration are very, very supportive of small or medium-sized businesses. Deregulation is not talked enough about, and there have been a lot of deregulatory moves over the past 12 months. And at the same time, obviously, the tax cuts, as your prior guests have talked about, are important not just for that higher-end consumer, say, with SALT deductions, but also that middle-income consumer is going to be a big beneficiary of the tax refunds that are going to start less than 4 weeks away. So I think a less bifurcated economy, a healthier economy, is clearly the path for 2026.
No, I think it's a path that we need desperately in this country, not just for markets, but just for the country itself. Your 10 takeaways with respect to middle America: the tech cap cycle, capex cycle, factories building, that's onshoring, the Fed easing, but we don't need them as much. Hopefully we won't need them as much. You talk about housing green shoots, and I want to bring that up in the sense that President Trump trying to move that needle a lot last week with several potential initiatives. Fannie Mae, Freddie Mac trying to lean on home builders. Just your thought on the affordability crisis with respect to the American dream.
So I think the affordability crisis has actually peaked, and you see that even in housing. As you said, there are green shoots unfolding in the housing market: mortgage applications, NAHB index, existing home sales, pending home sales. So you are getting green shoots, and so that's happening because at the margin things are starting to get more affordable. And as we go through 26 and you start to see a healthier, stronger labor market, then affordability will become even less of an issue as incomes start to reaccelerate.
You mentioned the tax refunds and watching business confidence closely.
Yeah.
There's always a survey and then there's always reality. Do you think that businesses will take it? It seems to me that they should take advantage of this one big, beautiful law that's now in place, because if you ever wanted to reshore or onshore, now's the time to do it.
Absolutely. Full capex expensing for a factory. First time ever we've done that. Even prior to that announcement, we have seen more and more onshoring in the United States. China's been a bad place to do business for over a decade now. And indeed, companies have realized that. So yeah, we are optimistic on onshoring.
Yeah, I mean, we've seen the FDI for China it's been negative for the last few years, despite the fact that it seems like the financial media, is always kind of cheerleading them. It hasn't been the best place to do business. So from a global perspective, how does America stack up with the rest of the world? Some people, remember we started last year with the end of American exceptionalism being the narrative. And you don't hear it as much as you did a year ago, but how do we stack up right now?
So I still think America is exceptional, and that's largely because of our innovation, our technology innovation. We have a capital spending-led economy. Capital spending improves productivity, improves profitability, and improves potential GDP growth, which means living standards. We're the only country in the world that is really driving towards that on a secular basis. It started 15 years ago. You've got green shoots unfolding in some countries, Germany in particular, where you are starting a CapEx cycle, but we're so far ahead that I think 2026 you're going to be surprised that the unemployment rate doesn't go as high as people expect, and then maybe comes down lower than people expect by the end of the year. And goods producing jobs, blue collar jobs, are actually going to be the driver of the labor market.
Wow. When I hear from you, I feel so much better. Nancy.
Yes, sir.
No, I really do. It's your work is amazing. But how many pages was the last report? Like 89,000?
No.
They called me up from the Tree Society after I printed it out. They're like, don't print any more things like that. It was really phenomenal work. Thank you, Nancy.
Thank you for your
time.
time.
Happy New Year.
Happy New Year.
All righty. Hey, folks, by the way, a reminder, I'm hosting a 1-hour program special, Fox Business In Depth, at the AI Arms Race. That's Wednesday, 8 p.m. Eastern, right here on Fox Business. We're going to dive into how America and investors can come out on top in the artificial intelligence revolution. And of course, make sure to sign up to the Unbreakable Investor Town Hall, right? 2026. Forget about computers. It's the year of human learning. It's your turn to learn. It's going to be Thursday, January 29th at 2 p.m. Eastern. Sign up to join me in person right here in New York City in the studio. Hopefully we'll get standing room only like we always do. Foxbusiness.com/Charles Payne Live is how you join me. I'll see you in a couple of weeks.